The concept of premiums on gold and silver can sometimes feel a little bit alien. Why do we have to pay more money over the intrinsic value on the silver and gold that we buy? And a lot of the time people don't necessarily take that into serious consideration when they are buying their gold and silver. But it's so important to understand. So in today's video, I want to go through premiums and what they're all about and how we can work with them to maximize our stacking journey. Hello everybody, Backyard Bullion here, and welcome to part 5 of my complete guide to investing and stacking gold and silver. Now today I want to focus on premium, this magical concept that instills how much we pay for our silver and gold over the intrinsic value, but also how it influences how much we get out at the other end of our metals when we come to sell them. Premiums are a universal concept. They unite us silver stackers around the world. How much we pay for this stuff is a very hot topic, and a lot of people will be more than happy to pay higher premiums for different items. You've only got to look at the different cultures between the UK and the US to see that silver premium really is not something that us UK stackers are as concerned about. But it is still a really interesting topic, and one that I think has a lot of value for both new and seasoned stackers. So as we go throughout the video, I do want to remind you all that I am not a financial advisor. I'm just sharing my own tips, hints and tricks about stacking. And please bear that in mind when making your own financial decisions. If you're enjoying this video as we go, quick reminder to hit that thumbs up button because it does help everything that we do here on YouTube. And let us know your thoughts down in the comment section. We'll see you down there for a good, fun, healthy debate about premiums on silver. Well, and gold, to be quite frank. They are there for every single precious metal that is out there available to us stackers. And it's usually more so on the physical side of things. So premiums, first of all, a very quick rundown of what they are. Perhaps you don't know what I'm talking about. So a premium on any silver item is quite simply the price above its intrinsic metal value. So if you've got 10 ounces of silver, let's say the metal price is $24 an ounce right now. I think that's not correct on today's prices, but you get my point. It's worth $240. That's the magical, mythical price that somebody attracts to this 10-ounce silver coin. However, a lot of you seasoned stackers will be looking at this incredible, wonderful griffin here, thinking, no, $240, or call it £170 for us in the UK. You'd be absolutely stupid to sell this for that much because the market can dictate a higher price, and that is the premium. That is what is dictating things. It's the market rate that's going for these things. Now, the market rate can be influenced by a whole host of other things, including geopolitical events out there, supply chains, simple business models of how much different businesses are wanting to try and make out of various coins. We do have this sort of market economy for gold and silver where dealers are able to charge kind of what they want, and if they've got customers coming through the door buying, then who's to say that they can't try and tag on an extra couple of pounds an ounce profit on a particular given item. Another thing that affects premiums are taxes. So sales taxes here in the United Kingdom, silver, that's a big thing for us to contend with. 20% sales tax if you buy a brand new piece of silver, which is pretty damning, quite frankly, and often you'll have another premium attached underneath that, which is the dealer's cut. So for a brand new piece of silver in the UK, you'll be very lucky to find it at sort of 30-40% over spot price, beg your pardon. And that's just a real kind of difficult thing to contend with. So what you do find then is the relationship between spot price and premium varies from coin to coin based on collectors markets as well. It's a whole can of worms if you open it up. Even bog standard bars like these can sometimes have premiums attached to them. There are older bars that have really high premiums. There are younger bars which look very pretty, and collectors will want to have them. If they're not made in much bulk, then they go for a bit of a higher price. So it's very much related to the economy of particular items and the general silver economy too. So it's really important to remember that it's something that fluctuates. It can be the flavor of the month, it could be the flavor of the week, the year. Certain items that are out there right now might not have premiums, but then all of a sudden might turn around and have really, really high premiums on them. So there's this kind of bit of a gamble that you can sometimes play on the premium market as well. And the prime example of playing the kind of premium market would be things like these 10-ounce Queen's Beast coins. So this is the griffin that you see here. I remember when I bought this brand new from the European Mint in Estonia back in, gosh, it must have been like 2017 or so when I bought these. They were dirt cheap. They were like £150 each. Absolutely incredible. On second-hand market now, you will not get less than 300 quid for this easily. So you can double your money based on the premium growth of these coins, which is pretty cool, pretty incredible. But that's not a guarantee. Now, premium doesn't work both ways. It's one of these concepts which is very confusing to a lot of people. A lot of people think, well, if right now I go out and I buy this coin for £300, if I go and see it on eBay and I see, a good deal for it, I go out and I buy it. That's not a guarantee that you're going to get 300 out of it at the other end. A lot of the time, when you go to a dealer, for example, they will offer you peanuts. They'll offer you probably spot price or just a bit over. It's going to depend on the dealer. There are some dealers that offer more, but generally speaking, you're not going to get your premium back from the dealer. Now, part of that is because the premium that you pay is part of the dealer's profit margin. And a dealer is there to make money at the end of the day. That's ultimately what they're there for. They're not a public service. They're not there as a bullion exchange mechanism to just use spot price. And so if they were, then they'd sell things at spot price and they'd buy things at spot price. Now, a lot of the bullion vaulted companies can often offer that service, and you can have your gold and silver bought at spot, sold at spot, but you are paying vaulting fees and transaction fees, which are the hidden premiums. So in this world, there really is no such thing as buying spot price gold and silver from a dealer, from a business. Really, if you're the one, if you're the savvy enough kind of person that goes out and tries to find the single best price for your bullion, from a dealer, you'll never get it at that price unless they've got a special promotional offer on or something like that. It's going to be very hard to find those kind of prices. But when you come back to sell it at the other end, there is then this misconception that you'll automatically get the premium back on your items. Now, I've been really enjoying some of the videos that Selfseeker has been making recently. If you've not checked his channel out, I'll try and remember to put a link down in the description box below. If I haven't, please somebody remind me in the comments. But Selfseeker is an incredibly entertaining YouTuber, and he's been doing some great videos phoning around different coin shops asking about buyback prices on various different products. And the premium at which the coin shops would sell them and then buy them back, it's really interesting to see that, and the different coins that have the different levels of premiums on the buybacks, because you can somewhat play the market like that in a short-term situation. But in the longer-term kind of bigger outlook, if you want to get the premiums back out of the coins and the bars and whatever it is that you've bought, you're going to have to put in the work yourself. And I think Selfseeker does a good example of that if you ring the very first coin shop that you can find on a Google search and they offer you spot price for something, you need to go and find more shops to get a better, range of what the prices would be on that open market to see what premium you can get. And then you could perhaps look at what you might be able to get yourself if you were to look to sell things directly to the public, which is essentially what a bullion dealer does. And it's not particularly difficult to do. You just need to have a little bit of time, energy, effort, and confidence, I think, to be able to do that. So it is possible to get as much of the premiums out at the other end. So going back to our example here, if you bought this for £300, one of the kind of rationales that I have always used for some things like this is if you see an item and it's listed at a high premium, but people are buying it, if it's proven to have sales at that level, then there's a good chance that it will continue to have sales at that level going forward. Now, that's no guarantee that we'll have the same prices of premium in the future. And all you've got to do is look at the recent releases of the Gothic Crown Quartered Arms. It started out from the mint at £260. Within the first day, there were confirmed sales on eBay of £800 for this 2-ounce coin. And it's suddenly gone down. It's gone down and down and down to £400 a coin. Now, the people who've been buying at £800 a coin, that's quite high. That's quite a high price. But it was there one time. So this human rationale in our mindset is always like, yeah, maybe it'll get there again. That's a bit dangerous. It's possible, don't get me wrong, it is certainly possible, but it is dangerous to do that. To play the premium market is a gamble, it is a risk, and it's not just about the raw metal prices. Now, yes, we could see some invasion of Ukraine. It's looking less likely at the moment, and silver and gold are reacting accordingly at the moment, but you could see some massive geopolitical event which propels the prices of silver up through the roof, and I wouldn't be surprised if we did have a massive growth in the premiums that come on top of gold and silver in an event like that. But it's not necessarily going to make it as easy to get the cash out at the other end. And getting the cash out at the other end is a really, really important concept, which a lot of people don't pay attention to because, quite frankly, a lot of people buy this stuff without even thinking about it, or they don't care because they don't want to ever look to sell their silver and gold. They want to keep it forever and hoard it and make sure they are protected. But quite frankly, not having an exit strategy is one of the biggest mistakes that gold and silver buyers make. And that is going to be the topic of our next part in this series. So if you'd like to see that video, then make sure you hit the subscribe button. And if you've enjoyed the content that we've been creating so far in this series, these 5 parts that we've done, I'd love to know from you. I think it's really nice to go back to the basics of this whole concept for me. And a lot of these topics I've talked about before, but they're all mixed up and jumbled in with various different videos. And I've got over 1,100 videos now. So I think having them all set out in a clear, concise way, focusing on a particular topic at a time, I think it's really good and I'm enjoying it. I hope you guys are too. So I'd love to know what you think about this series down below. And if there are any particular elements of the world of stacking and buying and collecting and investing in gold and silver that you want me to talk about or highlight for you. I mean, I've already got sort of 20, 25 different parts planned out for this series, but there will be other things to talk about as well. So let me know what you'd like to hear in the comment section. Otherwise, that's it from me. A massive thank you to you all for watching. I hope you've enjoyed this video. Don't forget to hit the like button, and we'll see you on the next one. As always, please make sure that you like, share, comment, and subscribe for more.